Right, as you already know, the name's Paul Rogers from a business called Synergy Commercial Finance. What I intend to do today is hopefully not bore you too much, but for about 10 or 15 minutes, I'll run through, I suppose, a bit of background on myself. I'll then go into Synergy Commercial Finance, who we are, and then I'll talk a little bit about the type of lending we help our clients secure, and also give you a couple of examples just to give you a flavour of what it's all about. And perhaps if anyone's got any questions, they can just hold fire to the end, which would be fantastic. Thank you. So we've got the first problem that the screen doesn't want to move on. Aha, we have live. Okay. Ooh, let's just do that. So, Paul Rogers, yes, as it says, 38 years I spent my first career working for NatWest Bank. Joined NatWest as a mere youngster back in 1978 and did all the roles you can imagine when you join a new organisation in those days, from making the tea, from sending bank statements out. And I suppose in the good old days, which most of us can remember, whereas your checkbook, for example, now turns up electronically in the post, in those days we used to have little plates in the office and we had blank checks. And when I say blank checks, it was literally that. It was just a check with NatWest name on. What we'd then do is put this plate through a special machine and we'd print your name and account number on every single, excuse me, on every single page of that checkbook. Can you imagine doing about 100 of those damn things a day, which we used to have to do? And then what we did, I think throughout the whole network, to be honest with you, we all came up with a clever idea to rig the machine up to make it go much, much faster, which involved a ruler holding one of the things down permanently. The downside was it stamped your finger on a regular basis. So I'm not sure health and safety would allow those sort of things these days. So I spent 38 years working for NatWest, did all the roles in the bank and worked my way up to my last job was as a relationship director working in our Stratford office, where I looked after the small and medium-sized businesses with everyone up to a £50 million turnover. So I've been involved in small businesses for 20 plus years as a bank manager, and then in my current role. So I've seen most things out there, which is good. And to give people peace of mind, I am professionally qualified. I spent 5 years in evening school when I was at the bank, becoming an associate member of the Chartered Institute of Bankers. And then I don't know why, just before that I left the bank when I was in my 50s, I thought it'd be nice to upgrade it. So I then spent some more years studying to become a member of the associate of the institute. So as I say, hold my professional qualifications, which is nice to have. So Synergy Commercial Finance, how do they fit into it all? Well, situation came along 2016. The bank wanted to get rid of a number of people in my grade, and they offered us the opportunity to put our hand up and take a little package for them. So I'm hard about that one. Had a discussion with my wife, and we both agreed I was too young to take the redundancy. Then one day something happened in the bank which really hacked me off. So I asked my boss to send me through one of those forms, let me fill it in and see what happens. So here I am. Our franchisor is Synergy Commercial Finance. As the name implies, they deal with all types of business and commercial finance. They actually set up their business in 2015 under the Synergy banner. So they've been going 6 years now. But by way of experience, as far as they're concerned, they also set up another franchise operation called Asset Finance in 2005, which deals with, as the name implies, all types of asset finance, whether it's hire, purchase, leasing, etc., etc. And what they found there was that their franchisees would go into them on a regular basis and say, okay, well, we can do the asset finance for the business, but what about the commercial mortgage? What about the bridging loan? And that effectively is how Synergy Commercial Finance evolved, a second franchise for these guys. As I say, I'm a franchisee, and the great thing about Synergy is I have access now to in excess of 200 funders. If you think for a moment to people who naturally go to their own bank to borrow money, when they go to the bank, they're actually seeing someone who works for the bank. And if the bank is able to help and support them, of course, they have a choice of one lender. When they come to someone like me, I'm working for the client. I'm not working for one lender in particular. And I have, as it says there, in excess of 200 lenders behind me. And those 200 lenders are actually vetted by the franchisor. So it's not just a question of we take anyone and everyone who's prepared to lend money to our clients. They do a proper vetting process. And I have actually seen them kick lenders back off our books because it's come to light subsequently they don't meet the standards, they don't meet the ethics that we want. So it's good to hear from that perspective. And all the time they're looking to expand the lending book and the number of lenders we work with. So what types of business finance can I get for the clients? Well, I say to people, it's sort of the A to Z of business finance. So it's anything from asset finance, bridging loans, commercial mortgages, right through to the finance you need to buy that zoo, which you've all been waiting to buy, I'm sure. So it's literally anything and everything. And in actual fact, when I've sat down and looked at it, there is in excess of 50 different types of funding I can get my clients. And it's almost whatever you can get from your bank, I can get that, not only from the high street banks, but from many other lenders we work with as well. And it's from simple things like cash advances. You all know what, obviously, shops have streamlined machines to take credit and debit card payments. I don't know how many of you know, but businesses can actually borrow against their future income stream from that debit or credit card. So a lender will know, well, okay, let's look at your last 6 months transaction through that system. We'll lend you money on the back of it. We can lend money for people to pay corporation tax, management buyouts, management buy-ins. If someone's doing a special project to do with renewable energy, again, we can look to help and support those people. We can help people buy land with planning permission or without planning permission. Now, if you think about that for a moment, why would someone want to lend on land where there's no potential planning on it or no planning on it? What's the exit route going to be for that lender? But again, we have people who will help and support our clients on that. Something that's come out of the pandemic has been very strong is more and more people are setting up and establishing Airbnbs. I'm sure you've all seen that yourself. And again, we've got lenders in that sector, and we've got lenders who help and support people who want to borrow money through their pension to buy commercial properties. So what I'm going to do is just look at a few of the regular key areas of lending which I'm seeing at the moment. So starting off with bridging loans. Bridging loans really come in three separate categories, which is residential, which can be a house to live in, or it can be a buy to let in a rent out. It can be for semi-commercial property, which is a shop and a flat, or a shop and two flats above, or it can be pure commercial properties, which, as the name implies, is where a business operates from there. One thing I would stress at this stage is I do not deal with residential mortgages or bridging loans where someone's going to live in that property themselves. That is because that is deemed to be a regulated type of lend, and I don't deal in regulated lends. You need separate qualifications for that. However, because we're part of a large franchise, we've got someone within the network who deals with that type of thing if someone needs it. So why would someone go to a bridging loan? Because it's not the cheapest source of finance. The type of scenarios we're seeing is where someone needs to complete on a property quite urgently. And believe it or not, we actually see scenarios where someone bids for a property at auction, they have to put their 10% deposit down, and then they have 28 days to complete. And at that stage, even though they've put their hand up, bought the property, paid their 10% deposit, they haven't got finance in place to buy it. So they've got no buy-to-let mortgage, they've got no commercial mortgage in place, and yet they've got to complete in less than 4 weeks. High street lenders won't be able to complete within those timescales, which is where bridging loans come in. We help people buy a property who've got credit problems, because again, the high streets isn't going to want to lend on that type of scenario. People might want to borrow short term to pay their tax. They might want to buy a property and use a bridging loan for it because at the outset, that property is uninhabitable. There might be problems with the property. You can't get a buy-to-let mortgage on it. Again, we can look to bridge that and move it onto a proper long-term borrowing later on. And also, we've got a couple of lenders who will lend funds on what's called a valuation basis only. So it doesn't make any difference at all what credit issues, what credit problems you've got. They will still lend, providing the value of the property stacks up. So I suppose bridging loans is something I've started to see more and more over the last few months, to be truthful with you. Next up, commercial mortgages. That's where someone wants to buy their own property to run their business from. There, we work with the high street lenders. We've got secondary lenders, the likes of Shawbrook, Aldermore. But again, more and more lenders are coming into that market, which you may well have heard of or you might not. The likes of Recognise is quite a popular one. We've got Atom Bank. So there are many, many lenders in the marketplace looking to help and support people with commercial mortgages. And if someone's got a few credit issues, we've got second or third tier lenders who are going to help and support those people. Another popular area is development finance. I think we all know and understand that there is a massive shortage of residential property in the UK. And despite everything the government's trying to do to encourage builders to build more properties, we just still haven't got enough properties. In development finance alone, we've got over 20 funders who will help to support our clients. And one of the funders will even do 100% funding. Okay, you've got to do it on a joint venture basis where there's a share of the profits as well. And you think, well, actually, why would you want to take a deal and give away half the profits? Well, there are a number of situations where someone might have, for example, some land to the side of their existing house. They get the opportunity there perhaps to get planning, perhaps to build a property, but they've got no money themselves to put into the project. So a joint venture will be undertaken on that type of scenario. Or indeed, we see situations where developers have already got a couple of projects on the go. They've been offered a fantastic deal to buy some more land, but of course have no money. So again, why not do it on a joint venture basis? And for these type of things, there's normally a monitoring surveyor, drawdowns against architects' certificates, but it depends on how experienced the client is on this, because again, if they haven't got the right expertise, we point them in the direction of the right lender who will hold their hand. Unsecured lenders, despite what we've been through the pandemic over the last 18 months, there are still lenders who will assist the business market with unsecured loans. And by that, there's no house on the line whatsoever. And they will potentially look to lend up to £500,000 with a repayment term of up to 5 years. Pricing on that starts from 4.5%, which for an unsecured loan is a fantastic rate. But as you will understand, over the last few months, they have become harder to come by those because of what all businesses have been through. But there's still lenders out there looking to help and support clients. Let's just talk through a few cases so you can understand a bit more about where I come in. Recently, a scenario where someone wanted to buy their own commercial unit, which they were going to run their own accountancy practice from. He went to his own bank, they offered him a deal. I went out to a number of the high streets because the high street banks do like professional customers. And I found him a lender that was going to beat the offering from his own bank. And then as that deal went on, I managed to squeeze the lender a bit more, and we managed to reduce the lender's standard arrangement fee from 1.5% of the loan amount to 0.9%. So it was a good saving to the client. And the other interesting thing on the back of that is sometimes I receive fees from the lenders for introductions. So not only was I getting the client a better fee structure on that deal, but in theory that also meant my income was also being reduced. So for me, it's not always about getting the best I can personally from the transaction. It's about doing the right thing for the customer, which I always feel is important. Next one, commercial investment property lend. This guy runs his business from some land which has got 12 investment properties on it. And if I'm totally honest with you, most of these are nothing more than a glorified shed. All the tenants on there had short tenancy agreements where they could give a month's notice and they could walk out on those premises. The guy had no experience in running a commercial investment property lend. One the high street banks wouldn't touch with a barge pole, but I eventually managed to find a lender that would help and support them. Well, if you think on that one for a minute, the guy's taking on a lend here through a bank who's going to put money out, but every single one of those 12 tenants could give a month's notice on day one, and there could be no rental income on day 32, if you like, after a month's notice. But again, still managed to find a lender that's going to help and support them do that. Semi-commercial investment property. This is shop and 2 flats. It was with a high street bank. very, very low loan to value. High street bank were effectively putting out the message, we don't want this type of deal anymore. It was only a £200,000 lend. They told the client they were going to push the interest rate up on that transaction to 7% above base. I've sourced it through another high street bank at 2.43%. You can soon work out what sort of saving that guy has managed to obtain, even on a very, very low level of lend. What we're finding now we're coming out of the pandemic is the high street banks are even more cautious than they were before. They're looking at their current portfolio lens. They're going, do we want this? Don't we want it? Let's increase the price. And if the client's happy to pay it and stay, we're getting a better return. If they don't want to pay it, they're not fussed if they go somewhere else. Let's be totally honest. Next one, limited company, bridging loan. Guys buying a couple of flats in Skegness. Why Skegness? Because the rental yield on these is going to be 10%. You buy a flat down here, the rental yield is going to be about 4%. The problem with him buying these 2 units is there's no bathroom, there's no kitchen. So couldn't buy them through a buy-to-let mortgage on the outset. So we're going to bridge the finance for the original purchase, and then he's going to move on to a buy-to-let. And the last recent case is another high street bank scenario. Large, complex, semi-commercial investment property portfolio. The guys with a high street bank at the moment got a lend of over £8 million. The bank has tied him up in knots security-wise. He's given them every single piece of property he's got, which is probably worth about £30 million. And they've also told him they're pushing the interest rate up. So I've working on at the moment, refinancing that whole £8 million. That's going to save him 1.5% per annum. That's also going to release £15 million worth of unencumbered property to the guy, so he can borrow against that later on if he so wishes. And the important thing is, I'm also going to get a 10-year commitment from that lender. High street banks on an investment property portfolio, where it's semi-commercial, commercial, will only give a 5-year commitment. Whilst it's a longer repayment term, it's only a 5-year commitment. So at the end of 5 years, the client then has to pay another arrangement fee. He then has to pay for all those properties to be revalued again. So that deal there for the client is going to save him well over £1 million over the 10-year term. In fact, probably only towards 1.5 million. But that's the type of thing we're seeing. You know, people, the banks don't want these type of deals anymore. Or if they do, the price just goes up and up. What doesn't bank like? They don't like people with adverse data, county court judgments, bankrupts. I say to people, it doesn't matter what your credit file is, doesn't matter what your situation is, there's always a lender who will help and support you. But you've got to appreciate it's going to come at a cost. If you've got adverse, the pricing goes up. The risk is greater for the lender. And I say to people, well, let's assess what that cost for borrowing the money is. What profit are you going to make out of the project? Is it worth you doing? Yes or no? If it's not, you don't do it. There's no point. But if there is, it's got to be considered, certainly. They don't like expats, non-UK nationals. They don't like people who haven't got any formal accounts for their businesses. Again, we can help and support those type of businesses. They don't like quirky security, something that doesn't fit their traditional box. If it doesn't fit in a little box, then a tick, they don't like it. Bridging loans, open-ended, they don't like that. What do I mean by open-ended? It means there's no formal repayment period. If bridging loans it's normally agreed that you take a bridging loan for 6 months, 12 months, 24 months. If you don't pay it back within that term, the lender will ask you to sell the property. We've got lenders who will provide an open-ended bridging loan until your credit position improves, for example. So where do my referrals come from? I suppose this touches on what we spoke about earlier, really. It comes from repeat business. It comes from banks because of the contacts I've got through ex-colleagues of mine who are now with other banks. You know, I say to them, look, if you can't help a client, believe it or not, the hardest thing to actually say is after you've had a relationship with a client for 3 or 4 years, it's actually hard for you to say, no, we can't help you with that finance, Mr. or Mrs. Customer. I say to them, well, if you can't help, just say you know someone who might be able to help and might be able to look at other lenders for them. And the referrals also come from my existing relationships. how can you assist me? I suppose it's just if you can listen out for scenarios where people say they can't speak to their own lender, they're unhappy with the existing finance, the bank's hard to get hold of, etc., etc. I am always contactable. I always return my phone calls. I always return any emails I get. I'm not sure every bank can say the same. An ideal contacts for me are people, commercial selling agents. Obviously, you've got estate agents who predominantly deal with residential properties. Commercial selling agents are great for me. Accountants, banks, and those people who say they haven't got a relationship with their bank anymore. Perhaps because of the size of the business, their relationship with the bank has been now downgraded and they're sitting within a pot of customers. And those people who moan about the banks, and let's face it, we all hear about that from time to time. And why do people use me? Yeah, we've got experience, we've got knowledge, etc., etc. And then I thought, yeah, probably everyone can say that. So for me, it's about, I always tell my clients my view of the situation at the outset. I'll be honest with them. I'll be upfront. If it's something I can't handle, I'll tell them that rather than waste their time. If I'm going to charge the client and its charge isn't always payable in every case, I'll advise them before they do anything. If there is a charge, it will never change. And I suppose one of the big things is, which not every commercial finance broker can say, I've got experience on both sides of the coin. So I've got many, many years spending on the bank side, understanding how their credit decision works, understanding how their process works, understanding what they look for, etc. And I've now got it from the client angle as well, and the commercial finance broker. And I was trying to think, what can I finish with? Something interesting about me, something you might remember. I suppose the thing to remember for me, I don't know why I come up with it today, is I am the man with 4 kidneys. So on the good side and the bad side, unfortunately, I've had kidney failure twice, which has meant that I've had to go on to dialysis for a number of years twice. But on the positive side, I've also had 2 kidney transplants. And the interesting thing is, when you have a kidney transplant, you don't actually have the old ones taken out because there's so much fat and tissue in your back. There can be complications if they remove them. So they put your new kidneys in the groin. So you can remember me, I'm the man with 4 kidneys. Thank you.
I genuinely didn't expect that, Paul.
I just trying to think, what can I finish with?
Yeah, I mean, it's clearly controllable now, right? And it's all good, yeah.
Oh yeah, very much so. It's
not being greedy with the kidneys, then. I mean,
sorry?
4.
Yeah, so I've got my old ones, and I've got 2 new ones which are in the groin. Yeah.
Going for any more? You're gonna go for 6?
Well, the trouble is, I'm just trying to work out where they'd put the next one. It might have to go on my head.
You need space for your extra kidneys. Right, I'm sure we've got questions, but I've got one first. I mean, the professional buying their own commercial premises interested me because it's something that at Savello will look at doing probably in 3 years' time. Now, I'm aware, because I've done a bit of research in terms of some of the costs involved in buying a commercial property for the first time. But for those who don't know, just explain a little bit about what you need to bear in mind in terms of cost.
Sorry, I lost you then. Could you just say that again, Chris?
So in terms of buying a commercial property, if you're doing it for the first time, what costs do you need to be aware of?
Oh, crikey. Okay, yeah, fine, by all means. The cost, the lender's going to charge you an arrangement fee, which is obviously, if you're buying a residential mortgage, there'd be an arrangement fee payable to the lender, but it's more expensive. As a general rule, the lenders are going to charge you about 1.5% of the loan amount. The lender's going to require a professional valuation undertaken on the property. That professional valuation will have to be undertaken by one of their own panel of valuers. So I discourage people from getting their own valuation done at the outset because you end up paying it twice. You're then going to have legal costs through your own solicitors, and depending on the transaction, there may or may not be a fee payable to me. So it's not a cheap exercise buying it, but I suppose you have to balance that out against, have you been renting a property, Chris? If you have been renting, what's that rent? How long have you been paying that rent for? And I've got someone at the moment who's paying rent of £15,000 per annum on his property, But when I talked to him, he said, "Oh, I've been there 12 years."
Yeah.
Well, that's suddenly £180,000 gone. It's no different to your own residential house, is it?
Well, I suppose the interesting one for me is because I'm doing a comparison at the minute for a client where they own a wedding venue and they're looking at putting it into their pension. And one of the big things was stamp duty.
Yeah.
And the impact of that. So I think so that's one of the biggest expenses when buying a commercial property, right?
Yeah, very much so. Yeah, it can be, definitely. And that's obviously all dependent on linked into the purchase price. And now you've mentioned that, I suppose over the last 3 or 4 months, I've started to see more inquiries about people buying a commercial property through their pension fund, Chris, especially where it's going to be for them to run their own business from, because effectively they're then paying rent back into their own pension.
Yeah, you know what? I mean, it's interesting. For this particular client, it's not going to be the right move because we've only got a short period of time he intends to run the venue. And there's some other factors that we need to bear in mind. But for a lot of people, it's worth considering. I suppose the only factor you need to be careful of is diversification, because effectively, if you buy a big commercial property and put in your pension, you're not spreading your money as effectively as you might. You're sort of reliant on that asset. But if you're the business paying the rent into it, it's certainly worth considering.
Oh, very much so. Yeah. And that, as I say, that seems to be a bit more popular, right?
Yeah, great stuff. Thank you. Any other questions from anybody else?
Oh, sorry, was that Carol? No.
Everybody's all good, right? Thank you. Oh,
Ian? Ian's got his hand up.
Yeah, I was going to say, what do you find is the most common amount that people come to you for financial?
It's a good question, but I suppose it's very hard to be specific because, I've had situations where people have come to me for £10,000 of hire purchase where they want to buy some assets for their business here. But then I've got the other end of the spectrum, which I mentioned earlier, where I've got someone who wants me to refinance £8 million worth of investment property lend. So it's literally anything and everything. And where I sit is, I'm sure like all of us, it's all about helping and supporting that client. So, it might not be a large transaction, but providing I can help them on their way, that's what it's all about for me. And sometimes it's just, even if I can't help them, it's about pointing them in the right direction. Maybe they need to look somewhere else or try something different. My attitude is it costs nothing to talk.
Yeah, absolutely. Yeah, thanks for that, Paul.
Oh, pleasure.
One extra question that I've got. I mean, I suppose one element, particularly, I mean, if it's property, you've got the security of the property as an asset that the lender can be a bit more comfortable with. Talk to me a little bit about like sort of using stock as security or another asset. Does that happen quite a lot?
Sorry, I don't know why I'm having trouble here. It's using what as security, Chris? Sorry.
So if you're purchasing a commercial property, you're in a position where
of course, yeah,
secured on that.
Yeah.
The lenders typically want their loan secured on an asset, like, for example, future earnings or stock, or what impact does that have with the interest rate?
If they've got security, they're going to get a better interest rate. There's no shadow of a doubt there, Chris. It's certainly going to help them. And I suppose, it depends on what the type of lend is as to what the type of asset, because, we've got lenders who will lend against a picture. Perhaps not a picture of you, Chris, with due respect, but a proper painting.
Sophie did an amazing, I mean, she's only 9, Paul. She did an amazing piece of art last night. Can I use that as security to buy me office?
No. So we've got lenders who will lend against a proper professional painting, which can be valued. They'll lend against handbags. They'll lend against watches. So there are lenders who will lend against almost anything, but I'd say that they're going to be a bit more expensive. But depending on the situation, they could be quicker because they can see your watch, they can value it and go, yeah, we'll lend you X against that. But again, there's lenders who will lend against stocks and shares portfolio. They'll lend against hard assets. So it might be the commercial vehicle, it might be the commercial crane. I've got lenders who will consider lending or consider helping to buy cows. So almost anything and everything. But yeah, if there's an asset involved, typically you should get a better price. But as you can imagine, the security is only one aspect of the lender's overall assessment. It's also going to be what contribution have you got towards a project? What do your financials look like? Can you prove there's secure serviceability from the existing business with it before we even look at the security? But again, I touched upon earlier, we've got unsecured lenders. For the right business, you can get it at sub 5% unsecured, which is a very, very good rate, Chris. Very good rate unsecured for a business. So,
what do you think the impact's going to be when? I mean, we've had the inflation news this week. Potentially, that could have an impact on interest rates. What are your thoughts around that?
Yeah. I would tend to say yes, but the only reason why I'm hesitating is I'm getting the impression that lenders are sitting on billions of cash. Whilst I don't deal with it, we'll have all seen in the residential mortgage rate that you can now borrow at below 1%, which is a phenomenal rate. The lenders are doing that because they've got too much money. You look at the high street banks, they don't earn anything if that money sits in their reserves at all. They've got to lend it out. And whilst at the moment they're pushing up interest rates on some of their lends to clients, I'm going, well, what do you do with it long term? You still got to get the money out there.
I mean, the interesting thing for me is what the Bank of England's going to do next, because typically they use interest as a dampener to inflation, and their inflation, they might use it to dampen it down. But
I agree. Yeah,
we shall see. We shall see.
Yeah.
Thank you, Paul. That was amazing. Really, really good. Learned loads, and we'll share your presentation on our Knowledge Hub on the Avery website, so everybody can see it and learn from it.